Welcome to day 4 of the bootcamp, and today we are heading right into the markets because we've understood candlesticks, guys. We've done candlestick 101. We've actually progressed into understanding the markets a little bit, but now let's get our hands into trading view and actually have a look at the markets and understand how market moves. And we're gonna intertwine everything, so candlesticks, and later on in the bootcamp as well, we're gonna intertwine everything into one. But today, I just want to fixate on technicals and the technical side of the Forex markets. And in regards to this, I also want to show you guys the technical indicators as well. Okay. So I'm not going to go into things that I don't use because I don't want to teach you stuff that I don't use. I want to teach you stuff that I use on a day-to-day basis so that you can use the same tools that I use to become profitable just like me. Okay, so when we look into the markets, the first thing I want you guys to see is we're on TradingView. Okay, and I'm just going to give you guys a quick rundown of TradingView so that you guys can master TradingView, because this is where you're going to be looking at the markets. Okay, I understand most of you use MetaTrader 4, MetaTrader 5, or CTrader, or even any other brokerage where you're looking at the markets there. But what I advise you as a trader is when it comes to the markets, look at the charts and look at TradingView. When it comes to looking at the money side of things, when it comes to entering your trades, then go into, let's say, for example, MetaTrader 4 or MetaTrader 5. Okay. So is as clear as that, guys. Okay. You need to make sure that you separate them both because psychologically it will help you. Okay. Now later on in the bootcamp, I'll explain more in depth of why it will help you psychologically. But for now, just take my word, guys. And if you're an experienced trader as well, you will understand that separating those two things is very, very great. Okay. So let's get right into the market. So first thing first, you can see that we have a bunch of candlesticks that we learned, and I hope you guys did your homework and understanding candlesticks and memorizing all the candlesticks formations, right? I'm not going to test you guys and say, hey, what's this candlestick formation and what's that, right? Over time, you'll gain experience. Okay. For me personally, I've always had my candlestick cheat sheet. So when I first started off, I actually didn't make a cheat sheet, but I always used to have like a book or something open up on all the candlesticks that I use, right? Or that I would like to see. And I just over time was able to memorize it. Okay. But right now, at the moment, there's no pressure. You don't need to memorize it. It's okay to have the cheat sheet in front of you. It's okay to have your notes in front of you. It's totally fine. This is not an exam. This is you trying to make money in the markets. Okay. So looking at the markets, first thing first, I want to show you guys is the top bar. So we are currently looking at Euro USD. Okay, Euro USD is a currency pair that we have in the markets. Okay, and on top of this, we have all these times. Now, we actually have a bunch of times over here. Okay, we can go from 12 months to 6 months to 3 months to 1 month to 1 week for 1 day, all the way to like 1 minute. Okay, now as a day trader, I've gone through so many um, time frames. Okay, I've gone through so many time frames, and I wasn't able to pick one specific time frame that we can use. And the reason why is because all the time frames have different, gives us different stories. Okay, so for me, looking at this, let's say for example, time frame, the 4 hours which we're on right now, what does this show me as a day trader? Okay, so what I'm going to do is I'm going to break through all the time frames for you, and we're going to start off with the weekly actually. And oh, we actually have a bunch of things from time ago, but I'm going to explain to you guys each time frame from all the way from the weekly to the day, to the 1 minute. Okay, now the weekly I'm going to explain is for more like scalpers. I use the weekly just to give me like heads up. Hey, look, we've been bearish for the past few weeks. Most likely we're going to be bearish for the next few days or next few weeks, right? It also gives us an indication of what's going to happen this week in the markets. Okay, so I don't actually do any analysis on the weekly. All I do specifically is I look at the weekly time frame to see whether we have a trend going on, whether we have the market going in a certain direction, and I need to like have a heads up, whether price is at a certain level, which I'm going to explain, and so forth. Then we have the daily time frame. The daily time frame is again Now, you would think that this is for day traders, but this is also for swing traders. Swing traders are people, like I said previously, it's for people who trade for a longer period of time. As a day trader, we want to be in the market, hold it for a bit, and then leave the market. That's what we want to do. We don't want to be in the market and then we stay for a few days. We want to stay at least for maybe a few hours to a day, no more than a day. I try to not stay no more than a day. I try to stay in my trades within my trading session. Okay. So the daily time frame is more for traders that for swing traders. For day traders, again, this is just a good indication where the market is moving. Okay, 4 hours. This is where we're getting a bit more nitty gritty. You can see actually from the weekly, right, to the 4 hours, you can see a huge difference. Okay, you can see a huge difference to the market. You can see a huge difference to where the candlesticks are. The reason why it's such a big difference is because the market is we're zooming into more of the larger candlesticks that we had in the weekly. We're zooming into those and actually understanding the story that the market's giving us. Okay, each of these time frames that we have on the top of the screen, these are just stories. These are just different stories for different times. Okay, so now just repeating what I was saying earlier about the time frames is when we have a 4 hour or daily or weekly, when we have to link it with the candlesticks, each candlestick is the interval of 4 hours. Okay, so for example, on this time frame, the 4 hours, each in candlestick is 4 hours long. Okay, so if I, for example, this candlestick, this is 4 hours, right? And as you can see from this specific candlestick, it's 4 hours of selling. Okay, if we go a bit more close and we zoom in, this candlestick here is 4 hours. Okay, this 4 hours was very much bullish. Okay, remember, like I said, bullish means that the market was going up. Okay, so we can now actually understand as a day trader, this is the time frame that I use to actually understand what is the overall story, what is the overall image that the market is giving us. Okay, then we have the 1 hour. 1 hour is, again, the candlesticks intervals are 1 hour long. So each candlesticks are 1 hour long. And you can now see we have a whole different image. Okay. But from the 1 hour to the 4 hours, you kind of see roughly, okay, this was the little downtrend, this was the upwards push, and so forth. So if I go on the 4 hours and we just highlight this big upwards strong bullish candlestick, and let's highlight it. So we highlight it from up here all the way down here. Okay, now if I show you on the 1 hour, you can see that was spread out to 1, 2, 3, 4, 5, 6, almost 6 candlesticks, right? It's actually meant to be 4, but I think the 4 candlesticks was most likely 1, 2, 3, and 4. Okay, but obviously I didn't do it properly, but let's say it was like this, right? This is the 4 hour candlestick. Okay, so now you can see that the time frames are kind of colliding with each other and they're actually giving us a bigger picture. Now let's get into the 15 minutes and you will actually see the 15 minutes gave us a more detailed, the 15 minutes gave us a more detailed approach to the markets. Okay, so for example, you can actually see the downwards push that we had and then the upwards push that we had, right? So it wasn't just a strong upwards push candlestick. It was a downwards push, then an upwards push. Okay. And bear in mind, this is still the 4 hour candlestick. This is still that 4 hour candlestick, but we're actually breaking it down into lower time frames, actually see what story was told within these 4 hours. Okay. Then you've got the 5 minutes. We can actually really look at the detail in the 5 minutes. Now in the 5 minutes, you can actually see it goes down and up, down and up, and you would think that, oh, we're going on a downtrend, but then it goes up and keeps going up, and then it goes a little bit down, then up, a little bit down, and then up, and it just keeps doing that. Okay, this is called time frame analysis, guys. Okay, what we've just done is we've broken a 4 hour candlestick all the way into 5 minutes. I'm not going to go into the 1 minute just because the 1 minute is basically going to show us even more details. But what I'm trying to show you is that the lower the time frame you go, the more detailed your story is going to be. Now, as a day trader, we don't need to go all the way to the 1 minute. Okay, we don't need to do that. A lot of traders like to trade the 1 minute time frame. For me personally, the 1 minute time frame has a lot of noise. Noise means that it has too many candlesticks for us to know what's actually going on. Okay, so for me, the maximum that I would go is a 5 minutes. I would look at the 1 minute. in case I need to see like a specific candlestick, which if we scale all the way back here to see the specific candlesticks, but my entries would be on the 5 and 15 minutes. Okay, when I'm entering the market, I want to look at these two time frames because those are a little bit higher than the 1 minute, giving me better confirmation. Yes, we might have a bigger stop loss, but I rather have a bigger stop loss and a better entry than having a false entry and price hitting my stop loss. Okay, so as you can see, we have just broken down from 4 hours, okay, the 4 hour candlestick, which was this upwards push. We have broken that into these different time frames. Now, I need you guys to understand something, okay? I'm just going to make this text a little bit larger, okay? I would say for swing traders, okay, they would use the weekly, comma, the daily, and 4 hours, okay? For day traders, okay, we would use the 4 hours, the 1 hour, 15 mins, okay? And obviously we could kind of put in brackets as well, 5 mins. And now for scalpers, okay, we would use I would say maybe the 1 hour, okay? Definitely the 15 minutes, and definitely scaling into the 1 to 5 min range, okay? Now this is something that you guys just need to know, okay? This is not a fixed rule, okay? Just because you're a day trader doesn't mean you can't look at these time frames, but you can kind of see how each of them kind of collide with each other, okay? The reason why I say these time frames, and this is just my opinion, guys, the reason why I say these time frames is because through the 5 years of trading that I've had, those are the time frames that helped me a lot. Okay, those are the time frames that helped me when it came to trading. And I've tried the 1 minute, I've tried the 3 minutes, I've tried the 30 minutes, I've tried the 45 minutes, I've tried all the time frames. And for me personally, the 4 hours, 1 hour, and 15 minutes, this one here is giving me the best opportunities. Okay, sometimes I would look at the 5 minutes, sometimes I would, but it'll be a very rare occasion, because when I look at the 5 minutes, I'm looking at so much noise, it could actually distract me from my overall move that I want to take in the markets. Okay, now what do these time frames mean to us as a trader? Okay, so I actually break it down even more, and this is more specific to the day traders out here, but I actually like to break it down even more to a whole new level, right? So the 4 hour gives us the overall trend, okay? The 1 hour gives us something called our key zones and levels, okay? And I'm gonna get into that for a second, but our 1 hour gives us the key zones and the levels, and the 15 minutes, right, gives us the entries, okay? And we could actually put here area of interest, AOI, okay? Remember that, area of interest is AOI, okay? So now we're breaking down the time frames even more, okay? And the reason why I am trying to explain to you why I go through these is because I will not look for an entry on the 4 hours. I will not look at the entries for in the 1 hour. I would scale into the 15 minutes to 5 minutes, and I'll look for an entry. And that's the strictness you have to have. The 1 hour will give me the key zones and the levels, which I'm going to explain later on in this video. And the 4 hour gives me the overall trend, okay? Now, but this is the structure that we're going to have in this video today. I know that I'm going to be explaining a lot of things today, and I really want to give you guys as much information as possible, but I also want you guys to actually take notes. Maybe watch this the first time and watch it, and then the second time you take notes, and the third time you watch this, it's you just summarizing everything. But I need you guys to understand this, okay? So what I'm going to do is I'm just going to remove, I'm just going to hide the candlesticks for a second, right? We're going to go for the 4 hour time frame first, okay? I'm going to first explain to you what is a trend and how we identify trends in the market, okay? So when we look at the market, right, the market is like this. Okay, obviously is a bunch of candlesticks. Okay, but the overall move that we have when it comes to this is the market is going up. Okay, even though yes, it goes up, down, up, down, up, down, up, down, right? Overall, the market's going up. Now, the market doesn't just go straight up. Even if it does, on lower time frames, you'll see that it goes up and down, like we saw. Okay, but the market, it doesn't just go straight up, but we need to understand the overall trend, and that's why the 4 hours is important. So the reason why I say this is going up, because the starting point that we have, which is here, and the end point, which is here, okay, is in fact price moving towards the upside. Okay, price started off at 1.08019 and it ends up at 1.08588, meaning that price has become more expensive, price has gone up. And what we call this, guys, is an uptrend. Okay, this is called an uptrend. Okay, now I'm just going to move all of this a little bit lower. Okay, there we go. Now we have something else. Price going downwards. Okay. Now, remember, like I said, the market's not perfect, so it's going to look like this. Now, why do we say this is going downwards? Is because price started off up here, ended up over here. Okay. And price, if I just get the arrow again and put it from start to end, price has gone downwards. Okay. And what we call this downtrend. Okay, these are the two trends that you need to know as a trader. Okay, the reason why I say you need to know is because this is how the market moves. Okay, the market overall moves an uptrend and a downtrend. Now there's one more move that we are missing. Okay, which we're just going to go a little bit lower, is something where we have something where price basically goes back and forth like this on the same level, and price started off here and price ends here. And you can see that we barely had a movement in price, okay? And what this is, and a lot of people have different names, but I call it a consolidation, okay? You can also call it accumulation, okay? But, accumulation. But for me, this is just a consolidation, okay? So we have three types of movements in the market. And the reason why I look at the 4-hour chart for this is because on the 4-hour, we can really see overall what the market's doing. Is it going up? Is it going down? Are we bullish? Are we bearish? Are we going to be buying or are we going to be selling? Okay. It is very important to understand these three concepts of the market because this is how the market moves. The market moves in these types of movements, okay? So now that we understand this, guys, I want you to take a screenshot of this. I want you to write this in your notes, okay? Because this is very, very important, okay? I'm going to delete this now, but I need you guys to take either pause the video or whatever it is, but I'm going to remove this now, okay? Now back to the 4 hours, okay? Let's actually get the market up, okay? Now, a little tip for beginners and even intermediate traders and overall all traders, actually, a little tip that I still use till this day is candlesticks can be very, very confusing, okay? And what I like to do is I like to go on the line graph and actually have a look at the line graph, okay? And the reason why I say this is because sometimes candlesticks can be confusing and is kind of sometimes nice to look at what's actually going on in the market when it comes to just the lines, right? Because that's what we saw on the example that I gave you. We drew lines, we didn't draw candlesticks, okay? So it is very, very important to actually use the line graph to your advantage. And we actually have a bunch of different lines, right? But different types of graphs that we can use. But line graphs is very, very easy for us to interpret it as a trader. Okay, when you're in school, we use line graphs. We don't really use candlestick graphs. And so when you're trading, it's sometimes nice to see the line graph just to look at the overall trend. We're not going to use the line graph for anything else. We're only going to use the line graph to see the overall trend. Okay. So now that we're looking at it, I want to look at the trend. Okay. So like we see, let's look for a point in the market where we want to start off at, okay? So for me personally, I want to start off at over here, okay? The reason why I'm going to start off over here is because we don't want to go too far back, but we want to see, okay, from October, maybe end of October to now, what's going on with price. Okay, we're day traders. We don't need to look all the way back in like 2023. Okay, we just need to look at, okay, cool, what's actually going on right now. Okay, and how could we utilize this? So what I'll do is I'll put a start point and I'll get an end point, which is current price. Okay, and I'll draw a line from there to there. Okay, and overall, what has occurred? It has been an uptrend. Okay, so I would actually label this uptrend, okay, or bullish, okay. And you actually start to notice that in my chart, I'll actually have on the corner of the chart, I'll actually have what my bias is for each time frame. Okay, so my bias for here is we're bullish, okay, and we're going on an uptrend. Okay, now we need to look at the 1 hour time frame. Okay, so let's get back on the candlesticks. Now we understand that price is going up. Guys, if you don't want to use a line graph, there's no shame in getting this, getting the arrows and draw out the arrows. So price goes up, down, up, down, up, down, up, down, like this. There's no shame in doing this, right? And actually understanding what price is doing. There's no shame in doing this, okay? There's no shame in drawing a start point, drawing an end point, and be like, okay, cool. This is higher than this point, so we're uptrend. Okay, there's no shame in doing that, okay? Now that we understand the overall trend, right, we're going to look at something called key zones and levels, okay? So we're going to go into the 1 hour time frame now, okay? Now I'm just going to remove this line here, okay? And we're going to go based on just this area, this level to this level. This is the only thing we're going to look at, okay? Now remember, we're looking at key zones and key levels. So these are areas where buyers and sellers have interest in, okay? These are levels where we call it supply and demand, or support and resistance, okay? And what this is, okay, if I just go back and hide this, what this is, okay, let's say price is going up, because in this example, price is going up, okay? We need to find areas of where we could buy and sell. Okay, now if price is going up, we don't want to be in the opposite side of the trend. We want to be with the trend. So what we would look for is places where we could buy. Now, do you remember, right? And I accidentally just opened up C Trader. It's fine. Do you guys remember when people say buy on the dip? Well, we kind of do the same thing, okay? And we buy every time price goes down. Okay, so like for example, these levels. Here and here. Okay? And these levels are our interested areas. Okay? But the problem is, how are we going to know that this is our interested areas? Well, this is where we bring in supply and demand, or support and resistance. Okay? And support and resistance is basically a floor and a ceiling. Okay? So what it is I'll just get my horizontal my lines here. This is what we call a ceiling. So from here to here, this is the lowest point, okay? And this is the highest point, okay? Now, we're going on an uptrend, so we don't actually need to know the lowest point. What we need is price to break here and come back down to this level, because we need a ceiling to turn into a floor. That's only how, right? And I'm actually going to write this down. For an uptrend, it goes from ceiling to floor. Okay. For downtrend, the opposite is floor to ceiling. And what I mean by this is that price from here, it goes from ceiling to a floor. Okay, which you can actually clearly see. And what we like to do is we like to draw areas within this zone. Okay, the reason why we draw areas is because price doesn't go exactly at that point, because it'll be too easy for us. So what we'll do is we'll have something called like an area of interest, or a POI, which is point of interest, same thing. And other traders will call it order blocks, whatever it is. In simple terms, it's just a ceiling turning into a floor. Okay, And what we would do is we would go and buy in the zone. Same thing. We'll go a little bit higher. You can see price created another ceiling. Okay. Right here, we would draw a zone on this area, and you can see that price comes to this area where ceiling has become a floor, right? And price continues to go up, and we would buy in this area. Okay. So we're going to use the same concept. Okay. And we're going to go on the charts and actually look for the same thing. Okay. So I'm just going to point out areas where price becomes a floor and a ceiling. So we have a ceiling around this area here. Okay. This is a ceiling. Okay. And you can see that price went up, right? Up, all the way up to here actually. But obviously we're going to call this, because this area is too high and price wicked here, we want to kind of use the bodies, right? So we'll actually use the bodies for this. And we've got a ceiling turning into a floor, okay? And what we like to do, like I said, price doesn't go exactly at that point. So we'll go like here, and we'll probably go from these wicks, so this body, right, to maybe where, to this body here, okay? It doesn't have to be exact, it's literally your choice, okay? And you can see that price not only once chose to be the floor, but it actually chose twice, okay? This has now validated this move, okay? So price decided to go up. This area is now become a key area for us, a key zone for us, because it's been respected once, twice, because people bought here, right? 3, 4, and 5 times, okay? This is a respected area for us. So next time price comes to this area, right, where price is coming now, next time price comes to this area, we most likely would buy or we would sell, okay, in this area. Now, in this case, because we're not uptrend, it'll be a buy, okay? So already we have just found a key area for ourselves, okay? Now to go one step further, because this is where we determine whether we are going to be a beginner trader or intermediate trader, we need to go one step further with this area, okay? And what we're going to do is we are going to, like I said, it's called key zones and levels, okay? What I like to do is I want to back my floor and ceiling, or support and resistance, I want to back that with a key level. And the key levels are basically round numbers where price is at a round number, okay? So for example, a round number in this case would be, which I'm going to get my horizontal line, okay, would be, I'm just going to put it solid, horizontal line would be 1.08500. Yes, it's not exactly at that area, but it's very close to our round psychological level. And the reason why we call this a round psychological level is because banks use these levels, we should use these levels, and price likes to be on round numbers, okay? Price likes to move. When you see news articles, they use round psychological numbers. They're not going to go 1.08531 or 1.09501. They're not going to do that. They are going to use round psychological numbers, which in this case is 1.085, okay? Now, this is a round psychological number, okay? What we can do is we can actually label out all the other round psychological numbers. So for example, another one, right? And I want to show you why this is so important. 1.08, right? 1.08 is a very, very strong psychological number. And I'll show you how, okay? If you have a look at 1.08, you can actually clearly see, we can scale out. You can see, and I can actually draw an area around it so you can guys actually see, right? I'm not going to draw an accurate area, but I'm just going to draw a little area around it. And you can actually see, guys, that every time price gets to this level, right? Price comes here, people buy. Price comes here, people sell. Price came here, people bought. Price came here, people sold. Price came here, people bought. Price came here, people sold. And it's very, very respected. Every time price came here, it slowed down, okay? That's the areas we want. We want areas where price slowed down, okay? That's where you call an area of interest, okay? Now, in this case, 1.08 is also around psychological level, okay? And how are we going to now draw an area accurately so that we can utilize it? Well, I'm going to write this down. An area of interest has to have at least three three rejections. Okay, three rejections. Okay, I know I spelled rejections wrong. Rejections. Okay, an area of interest has to have at least three rejections. What that means is that 3 times people either bought or sold, or some sort of area where wicks have gone up or body's gone up. Okay, so for 1.08, I would look at, okay, cool, price, I would say, and bear in mind, guys, I'm just going based off what I can see. I would say that we had this here, which is respected, but then also this body here. So like this area right here, because obviously price was a floor here, sorry, ceiling here, and it became a floor here. So I would kind of use, I might use that area, okay? And you can, and when the way we need to, the way we need to validate this is, has it got more than three rejections or 3 times that price has gone up or down? Well, this is one. Okay. This is 2. Okay. Price has gone down. This is 3. Price has gone up. Even if it's small, doesn't matter. And this is 4. So we actually have more than enough, right? And we actually have another one actually. This is 5. And the reason why this has so many points is because it's a round psychological number, whereas this one only had 1, 2, and 3. Okay, this only has 3. Okay. So instantly I know that, okay, cool, if price comes here, we're definitely going to see a move. If price comes here, we're definitely going to see a move. Okay. Now, it's very, very important that you guys start doing it in this format, because what will happen is, like, now we understand that this is the key zone. Even though it's very close to our psychological level, this is the key zone, okay? And we can actually go on to the 4 hours, and you can actually have a look. That is very respected. We could scale it all the way back, and we can see there's multiple moves. 1, 2, 3, right? 4, another one. We could possibly, if there's any more price, we could scale all the way back. Let's scale into this price here. Does it validate? Well, yes, it does indeed. 1, 2, 3, 4. So this is a very, very strong level, okay? And it's very important for you guys to understand that and use this style of analyzing the markets, right? Because you will start to notice that every time price comes in and we get some sort of slowdown of movement or rejection, okay? So now that we understood the 4 hours, the 1 hour, the key zones and the key levels, right? I need you guys to practice this. Okay, so the best thing what I like to do is, and the little tip that I'll advise you guys is, hide the price, okay, and look at the price on the side. Okay, look at the price. Okay, we got 1.07900, 1.07800. Okay, cool. Those don't really look like round numbers. 1.08 looks like a round number. Okay, cool. What's another one? Let's go in 5, 10s, 15, 20s, right? 1.085. Okay, this one I would call like a mid-level. The next key level will be 1.09. Okay, so another one, 1.09 here. Okay, and I would actually put it exact like that. Okay, cool. I like to keep my charts clean, so I wouldn't put too many key levels. I'd put it roughly where price is. So if I bring price back up, I know roughly price is around here. So I'll probably keep these 3 key levels just in case price comes down here or price goes up there. Now, to validate this key level, we'll have a look, guys. Price came to this level, push up. That's 1 point of validation. Okay, cool. Oh, let me just delete that. This is 1 point of validation. Boom, that's 1. 2, well, clearly here, okay? That's 2, this area right here, okay? 3, well, we can actually scale all the way back. I'm this confident, right? Would you look at that? 3, right here, okay? We can continue going. All of these are around that round cycle. We can keep going, guys, yeah? Do you get the point? So what I want you guys to do is today's homework, right? And we're going to look at entries more throughout the boot camp. I just wanted to show you like how to use a technical analysis and understand trends and understand key zones and levels, okay? I want you guys, okay, to go on your charts and look at 3 charts or look at 3 areas in the market And I want you to actually do this, guys. And I want you guys to, number one, find overall trends. Okay, actually identify overall trends. Okay, like how we done, we understood this is an uptrend. Okay, if we looked at from this point to this point, we would know this is overall a downtrend. Okay, I want you to look at that. Okay, I want you to find 2 to 3 uptrends, 2 to 3 downtrends. Okay, and then what I want you to do within that market, within that area, I want you to find key zones and levels, area of interest. And I want you to use this format here. Okay. I want you to use this format that we got going on over here. Okay. Later on in this bootcamp, we're going to go into entries, but I want you to look at this first. Okay. Now, we're going to look into candlesticks and merging this all together. But first, I need you guys to understand trends and key zones and levels, okay? Ceilings and floors, support and resistance, area of interest, whatever you guys want to call it, it's all practically the same, okay? I know traders like to complicate things and they want to call one thing and something else. Guys, I am teaching you the basic level of what it is, okay? I'm not gonna call it some new thing, okay? This is what I learned, and this is what everyone else uses, but they like to use fancy words to make it look cool, okay? In reality, it's all the same. Order blocks, floors and ceilings, support and resistance, POIs, AOIs, they're all the same thing, okay? I need you guys to understand that. Not only that, okay, you understood the trends, uptrend, downtrend, consolidation, okay? Once you have mastered that, right? Once you've done the homework, tomorrow's lesson will be more about entries and so forth. Or throughout the bootcamp, we'll go into that, okay? So I've actually got it written down what we have tomorrow because I do like to plan out our bootcamp. And what we have tomorrow is a little bit more different to Chartworks, is going to be risk management essentials, and that will involve entries, okay? So guys, this is today's wrap up of all the technicals side of things. I know I did say I'm going to run through the technical indicators, but what I want to do first is I want to show you simple price action. Once I show you a simple price action, then we'll go more into the indicators and so forth. But I want you guys to master price action first. I want you to be able to give me, okay, guys, this is area of interest. This is area of interest. These are the key levels where I'm only going to look for entries at these key levels. I'm only going to set my targets at these key levels, okay? So remember, AOYs can also be targets, okay? So we're going to wrap up today. We're going to wrap up with this chart, and I can't wait to see you guys tomorrow. Thank you guys for actually putting in the time and effort to be and turning up to these bootcamp videos. I really do appreciate it. If you have any questions, if you feel like I rushed something or you're genuinely confused about something, drop a comment down below and I will respond as soon as possible. I want you guys to all feel like you're getting support on a one-to-one level and not just feel like you're just watching a YouTube video and you are just learning from someone you don't know. I want you to feel like I'm teaching you right next to you. Okay, guys? So that's pretty much it. I hope you guys enjoyed this day. It's been very, very fun looking at the charts, and we've got so many days ahead of us, guys. So if you are overwhelmed now, don't worry, because slowly everything will make sense and you will start to make money.